This is the luckiest maths teacher in the world. Thank you so much for tuning in to this video on taxation. So we're looking at calculating tax in the Australian tax system. So in Australia, when you work, you get paid every week, fortnight, or month. Your employer has to take out some of your pay and give it to the greedy government in the form of tax. Now, how much tax anyone in Australia pays is calculated according to this table that you see on your screen. I just got this from the ATO website. So we have what's called a progressive tax system. We don't have a flat tax rate. It's not like 20% of what you earn is taken in tax or whatever. So a progressive system means that we have these tiers for tax called tax brackets. The more you earn, the more tax you pay, but also the higher proportion of your income that is paid in tax. So everyone is subject to these same rules. There's no rule that you pay less tax if you're over 30 or something. There are, however, some tax benefits, but we're not going to go through them in this video. So anyone who earns $18,200 or less doesn't need to pay any tax. The first $18,200 of income is tax-free for everyone in Australia. So how do you use this table to calculate someone's tax? So, for example, let's say somebody earned $125,000 per year. We're going to calculate how much tax they should pay. So you find out which bracket they're in. So obviously they're in this bracket here between $90,000 and $180,000. The amount of tax they pay is $20,797. But they also need to pay 37 cents, or if you like 37% of what they earn over 90,000. So we can use the distributive law to help with that. 37% of what they earn over 90,000. So just take the income and subtract 90,000. So they don't pay 37% on the whole income. They only pay 37% on this amount here, which is $35,000. So putting this on our calculator, we get $33,747. So I hate to be the bearer of bad news. Yes, in Australia, you need to pay a lot of tax. Someone who earns $125,000 would have to pay in tax $33,747. So as a flat rate, that ends up being a little more than 25% of their total income. If you divide 33,747 by 125,000, you get about 27%. So this person, 27% of their income is paid in tax. But if you were to choose a different amount, let's say somebody who earned $50,000, you would find that they pay a lower percentage of their pay in tax. So I just want to point out this $125,000, we assumed no deductions. So at tax time, you've probably heard people talking about deductions. The tax you pay isn't on just how much you earn from your employer, it's how much you earn minus deductions. So for this person who earns $125,000, they might have a deduction. For example, they might have spent $5,000 on driving places for their work. If that was the case, we would calculate their tax on $120,000. So we have to calculate tax based on taxable income, how much you earn minus the deductions. Our tax system is much more complicated than I'm giving it credit for. For example, what you can and can't claim as a deduction. I think our tax law is over 11,000 pages, but we're just going to stick to the very simple calculations of calculating tax. All right, this has been the luckiest maths teacher in the world. Thanks for watching. Have a great day.